Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we are going to be talking about the momentum day trading strategy, which is a powerful approach that allows you to capitalize on strong price movements in the market. Stay tuned until the end because I'll be breaking down exactly how to spot momentum opportunities, enter trades with precision, and manage risk effectively. So without wasting any much of your time, let's get started. So we're talking about momentum trading, and this is a strategy focused on leveraging the strength of price trends to make trading decisions. The core idea is simple. Assets that are moving strongly in one direction, whether upward or downward, are likely to continue in that direction for a certain period. Example, traders moving this way, we're expected to see momentum shifts, momentum drops, momentum shifts, and all of this within the day. We're talking about day trading. So this persistence in movement is what traders capitalize on. Momentum trading relies heavily on identifying trends. Traders look for assets with clear uptrend, upward or downward trajectories, avoiding those stuck in sideways movements. Key factors include analyzing price action, volume key levels, and market sentiment to confirm the strength of the trend. Also, volume plays a crucial role in momentum trading. I'll just add my volume indicator. When you see the increase in volume, it signals to us that yes, there is enough volume in the market. It signals strong interest from market participants, reinforcing the likelihood of the trend continuing. And additionally, technical indicators like the relative strength index, the RSI, the moving averages, and momentum indicators are commonly used to measure the strength and sustainability of trends. You can also use the MACD. So since we are talking about the momentum day trading strategy, let me give you the step by step. The first step is to scan for momentum opportunities. Identify the trends, scan for areas where we are bullish. Scan for areas where look for instruments breaking out of consolidation zones. We have one here. This was a consolidation. Price was bullish initially. Then price started giving us this pullback. And this pullback came in the form of a consolidation. Pay attention to volume also within this consolidation. You can see that volume levels are low. Volume levels here are very low because of this consolidation. And this is where we pay attention to volume. Asset trading at least twice the average volume are excellent candidates for momentum trades. And you can see this well when you see in bullish flag patterns. We call them bull flags. This is a prime example of a bull flag. We are bullish, then we have this pullback, and this is a bull flag. We call this a bull flag. And after the initial strong move, which is this flagpole, the price consolidates briefly, which is the flag. So we are to enter when the price breaks out above the flag on increasing volume. So place your stop loss just below the consolidation zone to manage risk. The way this is done is once we see the breakout, which happens here, and also once we see volume aligning with the have increasing volume here, increasing buying volume, showing that buyers are interested in this breakout. It's not just a random breakout, talking about momentum shifts. And we have that happening right here with this break. So we're looking to place our buys, stop loss below this low, and our take profits should be at the flag, the last resistance level, the swing high of the flag. Traders who love to stick to fixed risk reward ratio could just target 1:2. So this is momentum trading. Let me look for another example of the flag pattern when it comes to momentum. When it comes to momentum, okay, remember volume is a crucial aspect of our volume is a crucial aspect when validating volume. When validating our flags, we have here a flag and we have this consolidation, and you can see at the end of the flag we didn't have during the flag, I mean, we had this low volume areas showing smaller volume in the market. And at the breakout, where we had the breakout, at the same time, we have this increased selling volume, even though it wasn't too big as expected. But we have that increased volume, which was higher than the volume when we were consolidating. You can also confirm this with the moving averages. Ensure that price is below the moving averages before you take your trades. That's another indicator that you can use to confirm. Like, I like to add my exponential moving average, and I would like to use the 50 period in this to tell the trend. And looking at this, you can see that okay, EMA is loading, and you can see increased volume here. So price is also below our 50 period EMA. We're just looking to take a sell trade after the break and close below that flag line. The close there, stop loss above the high, and take profits all the way down. 1:2 is okay, 1:3 is okay, as long as we are still below the 50 period moving average. So this is just for flag breakouts. We have another wonderful example here. This is a very good flag. Have the flagpole here, and we have the consolidation phase. This could be regarded as the consolidation phase. Now we have price moving above the 50 period moving average, and we have low volume. See low volume here within this consolidation. Then we had the breakout, which happened right here, which is increasing momentum. At the same time, we have volume confirming that momentum, and we also have price going below the moving average, 50 period moving average here, confirming our trade. So the next step after this is to just go ahead and enter our sell trade at the open of this next candle, stop loss above that high, and take profits at 1:2 or 1:3 fixed risk reward ratio. And that's how I've been able to take on this trade. Another example, another way you can use to spot entry points using the momentum day trading strategy is looking for flat top breakouts in areas where you'll be looking at resistance levels. You should look for assets forming resistance or support at a specific price level after an initial move higher. So you enter when price breaks above this resistance zone, often triggering further upward momentum. We have a clear example here. We had the initial upward move, then we had the pullback and several pullbacks, another upward move again, had another pullback, had another upward move again, had several pullbacks. So this forms a flat top, as price has been using this area for resistance for a long time. And we finally had the breakout above the flat top here. Finally had the flat top breakout, and also this confirms with increasing volume. Have increasing volume at the same time. So we also have price being above the 50 period moving average. All of this points to opportunities to buy this Euro USD at the same time. Just place our buy entries here, stop loss below the swing low, take profits all the way up. 1:2 is okay, 1:2, 1:3 is very okay. So this is how we can use to trade the momentum day trading strategy. You should also confirm momentum strength. Use the relative strength index, or you can just use the moving averages. I prefer to use the moving averages because it's very straightforward and it's very key. Also remember to manage risk effectively. You just place your stop losses at logical technical levels, below recent lows for long trades or above recent highs for short trades. Use a fixed risk reward ratio, example 1:2, which I used here, or 1:3, and this will ensure that your potential gains outweigh your losses. So that is it for this video, traders. You've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you won't miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.